Hello, I'm Shein Shanin and you're watching Making the Call. Several research houses are looking at Malaysian Resources Corporation Berhad, or MRCB, which is planning a private placement of up to 20% of its share capital. The new shares will be issued to its major shareholder, Gapurna, and institutional investors, raising up to 612 million ringgit. Afin Huang and Hong Leong IB say they are surprised as MRCB had previously said it did not need new equity issuance to finance new projects. However, MRCB's management explained that the placement is to increase Bumiputra shareholding in the company from 28% to 35%. This is the minimum level for MRCB to qualify as a listed Bumiputra control contractor. This will allow MRCB to bid for construction contracts reserved for Bumi contractors. For example, 45% of the 28 billion ringgit Klang Valley MRT Line 2 works are reserved for Bumiputra contractors. The private placement is also to raise funds for property business expansion and debt repayment. Afin Huang estimates net earnings of 1.1 times as at June 2015 will be maintained, but financial year 16 EPS will be diluted by 3% due to new shares issued. It is maintaining a buy call for the stock. Target price is at RM1.80 based on a 20% discount to RNAV. Meanwhile, Hong Leong IB says the exercise came as a surprise as during the investors' briefing last week, the management had said that a cash call would be the last option on the cards. The research house has reiterated its buy call, saying it is still early days and MRCB is on the right path to turn the company around. Its target price for the stock is reduced slightly from RM1.70 to RM1.64 as it expects dilutive impact from the placement. And research has also maintained a buy rating for the property and infrastructure developer with a fair value of RM2.12 a share. The research house understands that MRCB has until May to meet the target of the placement, and MRCB will call for an EGM by year-end to seek shareholders' approval for the deal before fixing the placement price. MRCB's outstanding order book stands at 4.7 billion ringgit, and it has a sizable land bank GDV of 45 billion ringgit. RHB Capital is one of several banks in the country that have undertaken cost-cutting measures due to the impact from the slowing economy in the region. RHB, which is Malaysia's fourth biggest bank by assets, is laying off 1,800 workers from this month to January next year, costing 309 million ringgit. Alliance DBS says cost saving from RHB Cap's proposed rights issue and restructuring should pave the way for the group to start 2016 with a clean slate. The research outfit has upgraded RHB Capital to buy from hold, and target price for the bank has been lifted to RM7.10 from RM6.90. This target price implies 0.9 times financial year 16 book value. FY16 to 17 earnings have been raised by 7 to 11%. ROE should increase to 9.6 in financial year 16. Alliance DBS also expects dividend payout to normalize in financial year 16 to at least 30% of RHB Cap's earnings. And that's all we have for Making the Call. I'm Shein Shanin. Thank you so much for watching, and I'll see you later.